Hello everybody and welcome back to my YouTube channel. I am so excited to have you here with me today. If you're new here, my name is Rachel and I am a TEDx speaker, I'm an author, I'm a business owner, but most importantly for today, I am an accountant. I run a chartered accountancy practice and I also run the Instagram platform accountancy, which is accountant_she. I'd love to see you over there firstly, and secondly, through those two roles I get asked a lot of questions, and the question I'm covering off today is by far, and I mean by far, the most frequently asked question that I get. You might not think it's the juiciest, but I promise you, nailing this and understanding this concept as a business owner, as an accountancy student, will really help you. And even if you're not there yet and you don't think this is going to be on your radar or a decision you have to make for a while, it will be fundamental to the way you grow your business and implement growth and scaling strategy. So I'm really excited that you're here with me today to cover off what I think is a really juicy question. So let's get into it. I'm going to talk to you all about what the difference is between a sole trader and a limited company. So let's go. Okay, so the first thing to mention here is that this is a safe place. I am going to assume for the purpose of this video today that you know nothing. I'm going to hold your hand, I'm going to talk you all the way through it and explain any words that you might not know the meaning of or any questions that you might not know the answer to. So no need to panic, I'm going to keep things super straightforward and help you to really understand this concept in greater detail. So the first thing to say is that within the UK, there are two main ways of being self-employed. So self-employment is an umbrella term for working for yourself or being your own boss. So in the UK, there's two options and different ways to do that. The first is a sole trader and the second is a limited company. So if we look at being a sole trader, firstly, so being a sole trader quite often is where a lot of people start. Quite often it's seen as the gateway to self-employment. So being a sole trader means that you are an individual with a business or a trade, and the business and the trade sits with you personally. So let's say, for example, that I started making and selling face masks during the pandemic on Etsy. It could be that I started it as a bit of a side hustle and it took off a little bit faster than I expected, but I don't really want it to be a big incorporated company. I just want to keep it as something that's in addition to my income and something that I really enjoy. So let's take that example. So the business and the trade of selling on Etsy sits with me personally. So the assets and the liabilities and the responsibilities of having that business sit with me personally. And what also sits with me personally is the profit. So any profit that I make as a sole trader sits with me personally and is taxed as personal income. So all of the profit I make is taxed personally. And fundamentally, that's what being a sole trader is. It's having a business where you trade as an individual. You're not a big incorporated company, you're not in partnership with anybody else, you're not a shareholder, you are self-employed. So moving over to a limited company, let's stick with the same example. I thought firstly I would just run through the top 3 reasons that we see people incorporate limited companies. So the first reason, and this really is the number one, and I can't ever see it changing, the number one reason we see people incorporate limited companies is for tax efficiency. So what I mean by that is, as I said earlier, as a sole trader, all of the profit that you make as a sole trader is taxed personally. That's how it is. It's a one-way system. Do not pass go. Do not collect £200. That's how it works. Over in the limited company, we have a couple of different options and different ways that we can withdraw profit from the company personally. That gives us far more room to play with, far more room to be tax efficient. So the 2 ways that we can withdraw profit from a limited company is the first one is on payroll. So you might have heard of directors of limited companies being on payroll, and this is what they're talking about. So the first way that you can withdraw profit from a limited company is on payroll. And the second way that you can withdraw profit from a limited company is through dividends. And dividends is a word that if I ever say it on a new client call, some people get a little bit scared, or it's a word that you've heard of that you might not understand, and it is not a word that's meant to alienate you or make you panic. All a dividend is the formal way that we extract profit from a limited company and give it to the shareholders. That's all it is, it's as simple as that. So the first reason most people incorporate limited companies is for tax efficiency, and all that means is we've got more options and a wider range of ways to extract profit from the company to the individual. And it's really helpful, and it's really important to make sure that you're having those conversations with your accountant at the year end and making sure that each year you are being as tax efficient as possible. So the second reason we see people incorporate limited companies is in the name, limited. So it means limited liability. And back when I was talking about a sole trader, I said that all of the business, the trade, the assets and the liabilities of the business sit with you personally. Now that's not the case as a limited company. So as a sole trader, I, Rachel, sit on the same seat as my Etsy face mask business, and what happens in that business also happen to me. In a limited company, you legally separate. So I, Rachel, the individual, now sit on a separate seat to Rachel, the online Etsy face mask business. So everything that happens over here can't come back over here, and vice versa. So if I owed a creditor some money in the limited company, I cannot be pursued for it personally. And for a lot of people, having that assurance and the reassurance is very important. So the second reason we see people incorporate limited companies is in the name, limited, and that means limited liability. The third and final reason we see most people incorporate limited companies is actually a status symbol. So sticking with that Etsy example, I actually work with a lot of the Etsy, Shopify and Amazon community, and in those product-based businesses where you're working very often with wholesale manufacturers, wholesale manufacturers very often won't actually deal with you unless you are a limited company. So on all of the forms that they send you to become a supplier for the first time, they ask you for a company number, and if you don't have one, computer says no, they won't deal with you. So the status of being a company is the third reason we see lots of people incorporate limited companies. Okay, so that really is the fundamental differences between being a sole trader and being a limited company. But I'm going to move on next to your responsibilities. So if you haven't made this decision yet, and I've run through those top 3 reasons that people incorporate limited companies, and actually you're still not sure, I'm just going to run through the deadlines and your responsibilities because that could help you make the decision. So as a sole trader, each year, it's your responsibility to prepare a set of accounts, so to work out how much profit you've made, and then to do a self-assessment tax return to tax those profits. So as a sole trader, you have 2 jobs to do each year. As a limited company, however, because we've legally separated ourselves and we're 2 different entities, it basically adds an extra layer of responsibility. So the limited company needs to prepare a set of accounts to work out how much profit or loss it's made. The limited company needs to prepare a tax return, which is a corporation tax return. And then you, as the shareholder of the company, also need to prepare a self-assessment tax return to declare and tax any income that you've taken from the limited company out personally. So in a sole trader, there's 2 things to do: a set of accounts and a personal tax return, and in a limited company, there's 3 things to do. The company does a set of accounts, the company does a tax return, and you do a personal tax return. So there's an extra layer of responsibilities, and yep, you guessed it, that's an extra thing for your accountant to do. So you can expect your accountancy fees to be higher in a limited company than it would be as a sole trader because there's an extra job to do. So those are your responsibilities, but what are the deadlines? Obviously, it can't be straightforward and the deadlines are different for both. So as a sole trader, so your year runs from the 6th of April to the 5th of April, and then every year you have until the following 31st of January to submit your tax return and pay your tax. So it's really important to note here that that is the same deadline. It's the same deadline to file your return as it is to pay your return. So top tip. If you listen to anything in this video, please listen to this. Your tax year ends on the 5th of April. You have all the way through to the 31st of January to pay your tax. The sooner after your year end you prepare your accounts and you file your tax return, you can know how much tax you have to pay then, and you don't have to pay it until the 31st of January. So there are real tangible benefits to preparing and filing your tax return early. It gives you a really long time of knowing how much you need to pay, saving for your tax and paying it in January. So those are the deadlines for being a sole trader. Your year runs from the 6th of April to the 5th of April, and then you have until the following 31st of January to submit your self-assessment tax return and pay your tax. So next up we have got the limited company. So the limited company year end you can choose or change. So by default, Companies House will give you a year-end date rounding up to 12 months after you incorporated the company to the next month end. So if I incorporated my business on the 20th of May 2021, Companies House would round up my year end to the 31st of May 2022. That then remains your year end, and following that you have 9 months to prepare and submit your accounts and your corporation tax return. It is important to know that you can change your year end, so you can extend or shorten your year. So for example, lots of limited company directors really like their year end to be the 31st of March. It's the closest year end you can get to be as close as possible to the personal tax year end. So that means they can draw a line under the company accounts, prepare the company accounts, prepare the tax return, and then prepare their personal tax return as well. So doing that keeps it really tidy, and it is something to think about if you've got a year end that's slap bang in the middle of the year and it's June, July, August. So it is something to think about. Okay, so we have covered off the differences between a sole trader and a limited company, the top reasons that people become limited companies, the deadlines of being a sole trader and a limited company, and your responsibilities. So I really hope that you haven't found this as traumatic as Googling the answer, because that can really be terrifying. If you have run through this and maybe you think you need an accountant, or you think now might be the time to speak to somebody and get a little bit of expert help making this decision, please do reach out. We are accepting new clients now. And finally, thank you so much for spending some time with me today. I've absolutely loved having you, and I hope to see you again very soon.